Awesome. I'm here with Rune from PGS. Rune, thanks for taking time to speak with us today, and look forward to learning a little bit about your background. How you ended up in the seismic industry, and a little bit of a lay of the land with PGS today. So maybe as a quick intro, you could give give the listeners just a kind of a brief overview of your background and how the company is positioned today.
Yeah, well, thanks, Charles. It's a pleasure to be here. My background is actually from law. I was an energy lawyer, a partner in a corporate law firm here in Norway before joining PGS way back when. So I worked in the company since 2010. And now, after doing an MBA and a few other things, I became the CEO in 2017, and I've been the CEO since. So that was very briefly about my background. Obviously, it has been a rough 6 years as CEO in PGS, taking over in 2017. When we had to adjust the company quite a bit at the time because of the downturn which had lasted from 2013 in our business, and we were just getting sorted and let's say getting our ship in order when the pandemic hit us very hard early 2020, and we kind of had to do it all over again. Reposition our debt, reposition our cost base, and making sure we could sail through what became very difficult markets in 2020, 2021, which have improved quite a bit into 2022 and now also into 2023. So things look much brighter and much better now than what they have done over the last few years.
Yeah, that's great. And it's not every day that the lawyer becomes the CEO, but I suspect with a lot of the contracts and whatnot, that background has served you well. So right now, obviously for people that aren't familiar, you guys are a seismic company. So you have the offshore seismic vessels, you have the support vessels around those, but then you also have the seismic database. And now I guess the new energy division, which, I want to touch on a little bit later. But so how has the market kind of fundamentally changed over the last couple of years? Obviously, we're seeing pretty good cyclical strength in the offshore space, especially when it comes to drilling and offshore supply at the moment.
Yeah, no, our market has changed quite a bit over the last years due to the downturn has forced quality industry to adjust. And as you say, we operate in, if we could call them sub-segments of the offshore seismic market. We own vessels. And in the vessel market, we typically, when we have vessels, we use them for two purposes. One is that we rent them out for projects on a day rate, similar to a rig, to the larger oil companies of the world. And the other part of our business is that we acquire data to our own multi-client library, where we acquire the data, we put it into our library, and we sell it to multiple companies. The first business segment I will call the contract business, and the second segment I will call the multi-client business. This is our core segments. In addition to that, we also process the data, because the final product to the client is normally a map, a 3D map of the subsurface, which requires a lot of processing, a year of processing and imaging to kind of make that digital map. We have that as a business line, and then we can come back to new energy, which is kind of a new leg for us. So the market has changed, in particularly on the vessel side, where it has consolidated substantially. Back in 2013, when we entered the downturn, there were some 60 seismic vessels operating, 3D vessels operating worldwide, and we were, if I were to guess, 5-6 large competitors in that space. Yeah. Today, there are about 17 offshore vessels working worldwide, and there are two companies, PGS and our competitor Shearwater, controls 80 to 90% of that capacity.
Oh, wow.
Another company owns one vessel and another company owns two, and that's basically it, apart from Shearwater and PGS. We also controls what there is of, call it, spare capacity, which is not yet brought into the market, but are sitting, in fjords here and there, waiting for an even better market than what we're seeing today. So that market has consolidated dramatically, and has also, of course, led to increasing demand, and the contraction of supply has led to much better margin in that part of the business.
Yeah.
The multi-client part of the business, there are a few more companies. You have a large French company called CDG, you have TGS, our fellow Norwegian competitor, and you have the Schlumberger arm, or SLB as they now called, arm into Seismic, is also into data licensing from a library, and then you have us. So there are four large competitors in the, call it, multi-client space of our business. But obviously, most important for PGS is the dramatic consolidation in the vessel market, which is a key component of what we do.
I mean, 60 down to 17 is obviously a massive change. I mean, how do you feel about that number at the moment? Is that, I mean, you have a little bit of spare capacity. Do you expect to kind of stay around that, or do you think you'll see further contraction in the market, or potentially some opportunities to kind of bring, one or two units back online as well?
Yeah, I think we expect that over the next, call it 2 to 3 years, there will be a continued increase in demand, and that you will see PGS and particularly Shearwater bringing in, anything between 2 and 6, 7, 8 vessels.
Okay, interesting.
So it could be in 2019, just before the pandemic, there were 27 vessels operating, which would be an additional 10 approximately from today. So we could see that, but I think that will take some time to get there. All of that would come from PGS, and most of it from PGS and Shearwater, most of it from Shearwater. We have another probably 3 units we could bring in as 3D vessels, while Shearwater has more.
Okay, interesting. Yeah. So, I mean, how are you kind of approaching contracting? I mean, going through your latest presentation, it seems like there's obviously a good backlog, with a highly concentrated market like that, kind of how do you deal with your customers, and how do you approach contracting of the vessels, especially as, maybe there's a bit more fundamental strength, now than there was even a year or two ago?
No, I mean, clearly the focus from our side has been to get the prices back on a level where we have acceptable margins, so that we have a reasonable return on our capital, and we are getting there. So we are massively up from the trough of the contract business, but at that time we hardly covered cash. Cash cost was kind of where we were operating. Now we're at a profit, and at a healthy profit margin. I think you will continue to see PGS reporting improving margins going forward, but I think more gradually than very rapid step change upwards. If you watch the rig market, you've seen the rig rates go very quickly upwards. In our market, it's been more gradual, but we're still up at we're probably 50% up from the trough, which is still a considerable uptick, and it continues to improve.
Okay, great. And then kind of away from the vessels onto more of the seismic activity. There's kind of this perception, or maybe I should call it a misperception, from some of the investors I've spoken with, that they say a lot of the fields were cataloged already back during the last boom. And so there's less kind of demand for seismic now. I mean, how are you kind of seeing demand for kind of new exploration, as well as within, fields that folks are already producing from? And now we're healthily into mid-80 oil. Are companies starting to kind of revisit some of the old seismic that they might have done? How are you guys seeing that progress?
I would say that is a misconception. Just in terms of the fact that a lot of the fields are covered with seismic is not bad news, it's good news, because that means there is 4D or production seismic activity, which we do a lot of, and that is a repeat business. So we come back every 3 to 5 years and shoot the field over again, and then what you do is you take a look at the seismic and see what has happened as you have produced that field in meantime. right? And then where are going to place your next well and increase your production. So we have repeated profitability, surveys over producing fields. But I think that the big theme is not that continues to be strong. The big theme, I think, today is that a return of exploration. And there is no doubt that there is a return of interest for exploration. The major energy companies of the world are all saying that they will increase exploration going forward. There is a need to find more oil and gas to kind of supply the world, even in a world, if you're positive on, call it new energy and on reducing carbon emissions, there is still a need for new oil and gas, and the big oil companies of the world, energy companies of the world, realize that. So they're all saying to me that we are going to increase exploration. We're also seeing that as we talked a little bit on the backlog on the vessels, but also on new multi-client programs where we are shooting on our risk. We are getting pre-funding, people giving us money before we start so that we will take the risk, that we saw very little of in 2020, 2021. Yeah. Now we're seeing a lot of that. So there is a lot of encouragement to shoot new seismic in new areas for exploration purposes. So I guess the one thing that is in a way lagging a little bit is what we call late sales, or sales from our library where we have already shot the data. And okay, that is typically an exploration tool. I think the reason for that is that this is a discretionary spend, and what is characterizing this upturn is a combination of, yes, we want to do more, but there is also capital discipline. So there is capital discipline among our clients, and then they want to do more, and they want to do their rig programs, their seismic programs with vessels, and there the rates have gone up for us and for the rig guys, and then there is less money on the budget left for the discretionary spend buying seismic from our library. That is, I think, what we've seen in the first half of this year. That is obviously just you can't go on if you want to explore. You can't go on.
Yeah, exactly. No, the seismic, it's it definitely feels maybe like a little bit of a lagging thing. You got to get to do the blocking, the tackling up front. They got to get the rigs locked in. They got to get out there. They're starting to make a little bit of money, and then they they start looking around, saying, okay, well, how can we optimize? Where can we go? In terms of global projects, obviously, Brazil. I'm based here in the U.S. Guyana has obviously gone. Seems like they just keep finding more and more oil there. But I see that you guys are in kind of Malaysia and Egypt. Are you seeing any kind of more horizon type areas pop up that people are looking at, or is it's just kind of some of the old core, offshore Brazil? Where are you seeing some of the growth kind of in the offshore, traditional offshore space?
Yeah, it's a good question. I mean, first of all, I think exploration and activity, both on exploration and production, is healthy in the old core, if you could call it that. Brazil, Guyana, North Sea, part of West Africa, Angola, Nigeria. These areas where you have had a lot of activity historically are increasing. The new places, I would say, I would highlight at least two new areas. One is the Mediterranean. The Mediterranean is Egypt, it's Greece, it's Cyprus. That part of the Mediterranean, the reason for that is it's a gas basin. And the Europe needs gas after Russia invaded the Ukraine and cannot get gas from from Russia anymore. So there is a real focus on, exploring, finding new gas reserves close to Europe, and bringing it on stream quickly. And Egypt is one such area where we have had a lot of activity based on this. Another area of large activity is the southern part of West Africa, if I can call it that. It's Namibia and South Africa.
Okay.
It is super hot area. After the large discoveries of Total and Shell in Namibia, there is a rush to Namibia, you could say, and both us and Shearwater had vessels and shot seismic there last season. Their season is our winter season, to put it that way, and we will be back, and they will also, I'm sure, be back for the 23-24 season in that area. So that is two new hotspots arising.
Okay, interesting. And then in terms of, I'm sure everyone always is curious about security in those areas. I know, a little bit farther up, around Nigeria and whatnot, they're on the shipping side, folks can run into issues.
Yes.
How is it farther down the coast? Is that a concern that you guys have, or?
No, this is generally a Nigeria issue.
Okay.
Obviously, there is we check out security everywhere, and there are some area high risk. Then you're in the parts of Nigeria, Gulf of Guinea there, and then there are other medium and low risk. When you get down to Namibia and South Africa, the security situation is completely different. So that's good.
Great. Yeah, that's positive. Yeah, it seems like there's a lot of oil in that part of the world, so I suspect you guys will be spending some time there. And then I know you guys stood up the new energy division and have been doing. I saw a recent press release around some offshore projects. How has that been going? There's also news in the market that some of the, I guess, maybe clients of yours have struggled a little bit with some of the economics of these projects. But how is it from a seismic standpoint in scoping out some of these new wind ventures?
We established a few years back our new energy division, which is focusing primarily on three areas. It's carbon storage offshore. It's offshore seismic for offshore wind parks. And then further out, which I'm not going to talk too much about, is marine minerals, which also will require seismic if it kicks off. But that's it. It's further out, so let's not spend too much time on that.
No.
On the carbon storage side, we did 4 of the 5 surveys that was done last year, and we're doing another one this year. There we map out the reservoir just like we would do any oil and gas reservoir, but obviously the client is more interested in the overburden, what's above the reservoir, so that it seals and all that stuff than in oil and gas. But it is very similar. We use the same vessels, same technology, and a little bit different processing or imaging, but very similar to our existing technology. I believe this market will be, call it flattish on a fairly low level for a few years before it will kick off, because you're seeing activity everywhere in the world. It's just, I think it's a few years until seismic really picks up everywhere. This is, for now, mostly a North Sea phenomenon. Offshore wind is interesting because that market is already here. There's a lot of seismic being done for offshore wind, and you rightly pointed out that we have deployed a new equipment here, and we're shooting 3D seismic, ultra high density seismic for offshore wind. So we map the first 100 meters on the seafloor, so that where you're going to put your windmills. We give a better picture, and we can also accelerate that process for clients. That is our selling point, and that has gained quite a lot of traction. So we are now just about these days to finish up our first job in the Irish Sea over two wind park areas there, and then we will move that vessel with that equipment over to the New York Bight and shoot 3D over an area in the New York Bight where there is plans for a wind park, and that we will be there at least until March, April, and there is significant interest for this solution also into 2023, 2024 and onwards. So we're actually considering buying a second set and equipping a second vessel with this. So it's interesting. It is still in the area of $30 million plus a revenue stream for PGS last year in 22 and 23. What we foresee a higher revenue in 24. So it's still hovering around, just below 5% of our total revenues. But I think, give it a few years, this can be significantly larger for us and very interesting. Our economics are similar to oil and gas, so we want to have the same margin on this as we have on oil and gas, and that is what we're currently getting.
Okay, yeah, that's great. I mean, I assume, taking your vessel out to shoot seismic, you would, in theory, would generate the same returns no matter what the project. But yeah, you never know. So that's positive to hear.
Yeah.
Yeah, I mean, in the U.S., they're obviously scoping out a lot of offshore wind areas. We've had a lot of, or not we, but the government is still trying to figure out exactly how they're going to approach that. Especially, we have the Jones Act here, but I haven't done the research, but I suspect there's no Jones Act seismic vessels out there really. So it'd be interesting to see how those projects develop here in the U.S. One thing that I was looking at with you guys was kind of the Versal, kind of where you guys got together with your competitors and have been, are offering this service or this platform rather to the industry. What was kind of the process like of coming together with some of your competitors to offer that?
Yeah, I think we all realized, we all have, massive data libraries with seismic data, CGG, TGS, and ourselves, and we compete obviously on selling that. We all realized that what we do not compete on is how we present it. The actual solution on how the client will see the data and get the data. That is more of a facilitation exercise. So we got together realizing that we will still obviously compete on selling, but why don't we join forces and share costs on making a platform where this is more accessible for the clients to go in and view, where do PGS have data, where does CGG have data, where does TGS have data, and also then facilitate a better purchasing exercise for the clients, and hopefully that will generate more revenues in total for buying seismic, and we will all benefit from that. So that was the idea, and that was the idea. We got together on this and developed this digital, call it marketplace, where you can log into to the world and see where we all have data and compare the different sites. And then if you want to buy a data set, then obviously you have to go to the different companies, and there is obviously no visibility for the others on the purchasing exercise. So this is
gotcha.
a little bit of a shopping window, which has made buying easier.
Perfect. And so that's kind of going well for everybody, or is it? It's been no points of contention. I know it's always tough when you offer a joint thing with your competitors.
There is always points of contention. Obviously, but it has actually gone smoother than what I think all three of us had feared when we got together. But the three CEOs got together very early and said, we need to compete on what we can compete on. This we need to cooperate on. So that was a fairly smooth process, and I think we have made this purchasing exercise for the clients much better by way of doing this.
Awesome. Well, I know we have a few more minutes. I wanted to kind of hit you with a couple more questions here. I know on the financial side, you guys have been, it seems like quite busy this year. Obviously, you did the bond deal, some other debt kind of stuff. What was the feedback from investors during that process? How have you been? What's kind of been the feedback in the market from what you guys have been doing?
I mean, it is. We have been, as you say, been able to raise a bond in what was a very difficult market. We also just refinanced some other debt and prolonged that in a more like bilateral deal. So there is considerable interest from the credit market to invest in PGS credit instruments. But obviously, what you're seeing is also that since the underlying interest rates have gone up dramatically, and we're paying a similar similar margin on our debt compared to the margin we had in our existing debt, the total cost has become quite expensive. So we have considerable interest. A lot of people want to invest in us, but in my opinion, the debt is expensive, and there will be or we have as a goal to make sure that we refinance that debt as soon as we see that we can get the margin down, and over time we also think maybe the interest rates in the world will go down, but at least the margin will contract as we're moving up in the credit rating spectra, to put it that way.
Yeah, so the term loan is at what, like SOFR 7% or something, right? I mean, that's when LIBOR SOFR gets over 5 plus 7, that's a pretty healthy number.
Exactly. And we had the SOFR or with LIBOR plus 7 before, and we were quite happy paying, what was it, 8.5 or something. But when the LIBOR now SOFR have expanded like that, we get these results. So we will continue to reduce that, and we will refinance when we see an opportunity to get it cheaper.
Perfect. And then, on the strategic front, do you see any? Obviously, there's a few main players in the space. I suspect it would be difficult for any real consolidation, but what are you guys looking at on the strategic front? Are there opportunities for consolidation? How are you guys approaching that? Yeah,
I mean, there are of course always opportunities for a consolidation. The vessel side seems to be very consolidated, so obviously probably not there. But I think any company like us operating in an industry like we do will always have that on the agenda, to put it that way. Can't comment anything more than that, I think. But M&A, whether it's consolidation in the, call it, bigger our main core business, or whether it is adding smaller companies to expand our offering or enter into new markets. Obviously, what we're doing for example, in offshore wind is an area where M&A can be a topic, or we could develop it organically. So clearly on the agenda, but I don't think I'll comment any more on that.
Yeah, perfect. And then a lot of our subscribers are very focused on Brazil. We have a lot of people that are Petrobras shareholders, and I see you're also on the board of Seacrest Petroleo. I mean, how has it been from PGS's perspective? There was a bit of hesitation or nervousness in the international community around the election and the change of power, but Petrobras has been doing quite well. How are you guys seeing things in Brazil? And really, I mean, how are you guys kind of approaching that market?
Yeah. I mean, we have been obviously very active in Brazil for decades, so it's a market we know well. We have a reasonably sized office there, and are shooting seismic there as we speak, and we'll do more later. We were, I think, as everyone else, when there is a change of power in a country like Brazil, you're a bit anxious. Okay, what will happen to Petrobras, which is run quite strictly from the government as well. Yeah. Will things change? Will we see a different Petrobras? I think from the PGS side, I don't think we've seen much change. It is business as usual in our dealings with Petrobras, and we were awarded the contract just before the election, and we signed it just after the election. So there was nothing, no interference from the election in that respect, and we will start acquiring that contract, 4D contract for Petrobras later this year.
Okay, awesome.
So we think it's business as usual in Brazil from the PGS side.
Yeah, no, it seems like it, and Petrobras has been returning money to shareholders. People were nervous around that, and it seems like everything is going quite well down there. Well, it wouldn't be 2023 without asking about AI. Where are you seeing some of the potential for AI in the seismic industry, and do you see any potential kind of consequences of AI in the seismic side?
Yeah. No. If we talk about AI, which obviously is top of the agenda on any company these days, with ChatGPT coming out and all that stuff. I think for us, you could kind of very easily split it in two and call it the generative AI, the chat GPT, stuff like that. For us, it's like for any other company, we use it in HR, communication, finance, and I'm sure it will change the way we work in the company. So it's kind of there, we're similar to everyone else, so I'll kind of leave that aside. But if you talk about AI as more, call it machine learning, developing software and things like that, we have been working with AI for close to 10 years.
Yeah.
And done quite a bit on the AI side, and in particular with respect to what we've been doing on digitalization of everything we do. And AI in what we call the imaging business, where we take all the digits we collect offshore, and we make that into a 3D map, which is a 12-month exercise. It requires supercomputers, now the cloud, and a lot of softwares we have developed ourselves. AI has gone into a lot of those workflows for many years, and we, our R&D team has been working with AI and machine learning to, simplify and improve that process for many years. So we are excited about what that can do, and we think we've only just scratched the surface on what AI can do in processing. We think, for example, it could, turn down the cycle time, and we can deliver data to clients much quicker after we have acquired it, when we continue to develop machine assisted AI in our imaging business. That is clear. Yeah. And I think also on the interpretation side, people looking at the data and seeing, okay, are there oil and gas here? I know the oil companies are looking into AI, whether you can have AI assisting geophysicists look for oil and gas, and thereby you call it reducing the number of dry holes. It's obviously in a way holy grail in our business.
It's fascinating. I mean, when you're an equity investor, I feel like you can kind of get lost in the numbers and stuff, and you forget about the absolute amazing technology that goes into a lot of this work offshore. So that's fascinating. Well, Rune, I appreciate your time. I know we're here kind of at 30 minutes, and I know you've got things to get onto today. But as a parting comment for the audience here, what would you say to kind of get them excited about the PGS equity story?
Yeah, I think the big story there is we are seeing a growing demand for seismic services. I believe we're going to see a growing demand for seismic services and kind of offshore services for multiple years. I feel quite confident on that. We are in a market where there are on the vessel side only two competitors, and we totally dominate the market. And it's not easy to become a third player in here, because you would then have to either build vessels, and the yards around the world are full, and we control the whole spare capacity. So I think we're in a very, very interesting perspective, which I think will pay off significantly over the next years to come.
No, that's great. Yeah, it seems like you guys are well positioned. Well, I appreciate your time, and thank you today.
Thanks, Josh.